very tight quarters here with this current camera setup.
Our quarters are tight.
Correct.
Our dimes are loose and our pennies are missing.
Hey, everybody. Welcome to Indiana Success Happy Hour. Brian Quinlan here once again, and still from Daniel's Real Estate and Move Me to Indy on YouTube.
And Brad Niccum from Nest Mortgage Group. And a little bit of time on tasting tequila with Brad.
Just a little bit.
Just a little bit.
All right. And next to me, yet another furry gentleman. We've had a few of those lately. Sir, tell the folks who you are.
Well, first off, I want to say I'm a little offended by the furry comment. However, my name is Keith Steele, and I'm also with Nest Mortgage Group. I work there as a senior loan officer, not as a furry.
That is well played, Keith. Welcome to the show.
It's good to be here. Thanks for having me,
Yeah,
guys.
we appreciate you coming in, man.
I'm excited about it happening.
You see him more often than I do.
That's actually, we probably
Maybe not true.
That's
it's about equal.
Yeah.
That's true. That's true. Working remotely, right?
Yeah. Yeah.
This looks familiar to me.
That's Quinta Lisa.
Hey, all right.
But this one's special. This has a gray label on it.
Especial?
The other one had a black label.
Oh.
It's up there. See it?
Yeah.
Over that way.
Yeah.
Okay. The difference is
I do.
high proof, still strength, cast strength. So this one is coming in at, I believe, 45% alcohol.
Lightweight.
So still rested in coffee barrels, still the same great tequila from NOM 1522. Ileana Martinez did a great job making it. It's just a little stronger, a little bolder, a little more kick-ass.
Stronger, bolder, but with a lighter label than the black label. Up
Yeah,
there.
I think they shot their on the black label and then went, oh, crap. Maybe something
Oh,
else.
this one's
We're gonna
strong.
take it gray.
Well.
Hey,
So
it's a bold new spirit.
Okay.
It says it right there.
It does, right there on the bottle.
They use cold press coffee barrels to age this.
Okay.
So you take a tequila, age it for so many months in an oak barrel, and then pop it out of there, put it in this cold press coffee barrel, and it gives this nuance of coffee. And you can probably smell the coffee right in there.
I'm going to say sure.
You don't.
Let me ask you this, Brad.
Okay.
So a lot of the bourbon barrels, those oak bourbon barrels,
Mhm.
they actually repurpose those, and there's a big secondary market where after they tap the bourbon out of those are resold and they sell them to wine companies, other distillers,
Mostly
other
tequila
liquor
companies.
companies. That was going to be my question.
Yeah,
Did those
actually-
go to any of the tequila companies?
The whole reason tequila is aged is because of the overabundance of bourbon barrels back in the day. And Americans drank drank tequila as this white lightning, get drunk as fast as you can. And they created the first reposado category, which means it's been aged for more than 60 days, less than 1 year. And they use American oak bourbon barrels. And those are the number ones. And the reason why is they are one-time use, right? Scotch barrels, other whiskey type barrels sometimes can be multi-time use or a second use or a finishing barrel. Bourbon has to be first use. So they're very wasteful in their sustainability of a category because they only use the barrel one time. So yeah. So this is American oak whiskey barrels first, and then cold pressed coffee barrels. And then they're doing over and over again. So after they do the coffee, the barrel goes back to the coffee shop. They now age the coffee in what was once a tequila barrel. And then once that coffee comes out, it goes back to tequila. And they're just completely reusing those same barrels over and over. Coffee, tequila, coffee, tequila.
Huh.
And then in the tequila world, you may have a bourbon barrel that's been used 20 times. And you may have a light amount of color. It doesn't change the tequila a lot. It's just adding some barrel nuance. And that's the difference between tequila and bourbon is you don't drink an unaged bourbon. It tastes like fire and lightning and moonshine. And since it's made in that area, like probably cousin's sex sweat is what it kind of tastes like.
Wow.
Oh, wait. Let's pause right there for a
Whoa.
second. What is it exactly that you know about cousin sex sweat?
Just some friends of mine.
Yeah. Did you do that in the oak and barrel too?
Never tasted it since being from Indiana, I learned that from my friends that were all Kentucky basketball fans.
Wow. Shots fired.
No, it's completely kidding, folks. It's West Virginia that does that. It's not Kentucky.
Nice save. Did I tell you that my family's all from Appalachia and Eastern
Yeah,
Kentucky?
it's all West Virginia that does that. every Kentucky joke I was told is actually a West Virginia joke as well. They just shoot them back and forth at each other.
That makes sense.
Yeah. So anyway, yes, bourbon barrels are very plentiful in tequila.
Okay.
Yeah.
Thank you. Well, I'm going to
Some of that probably should be edited so we don't get lots of bad comments.
We're not editing any of it. So the weather outside sucks. And it just seems to be getting colder. I think we may have snow come this weekend. And so
if you had to sing how bad it was, what would the song be?
Well, that's a Christmas song, and we're beyond that. I'm not going back to that.
Thought maybe you'd throw it out there.
No, it did go through my head, but no. Anyway, Summer Shandy from Line and Kugels, trying to bring a little summer sunshine here to this craptastic weather that we're going to be going through.
Where do the Line and Kugels come from?
They are from Milwaukee, Wisconsin.
I thought it was Wisconsin.
Yeah. So there you go.
Cheers.
Nothing fancy there.
We didn't even get him a water.
Yeah, they've got my training wheels on here today.
My goodness, we
folks,
didn't even get him a water.
You know what do I do about that?
We're going to pause right now. Would you get the man a water? And because of magic, Brian's editing magic, now we have a Red Bull in the man's hands, and he's going to feel good the rest of the night.
All right. Yeah. Well, cheers.
Cheers.
Thanks for being here today.
Thanks for having me, fellas.
All right. Keith, you're a Nest Mortgage guy. Have you always been with Nest Mortgage?
Not always. No, actually, I started a long time ago with a GMAC Mortgage.
Okay.
Before they shut down after the meltdown in 2008. And I came on board with Nest Mortgage in January of 2010.
This is what it looks like when you make it through the nuclear holocaust of the mortgage world.
This is it.
This is it. Or this is it too. we both survived.
Different looks here.
Yeah, someone said you can do it, and we did.
Yeah, and I've been trying to grow a beard like that for 56 years.
Have you?
Yeah, it just won't come out. And
it may have taken you all of 56 years to get this beautiful beard.
I'm
You'd
telling
never
you,
have to cut it though.
If I don't, for 56 years, there'd still be like 4 patches over here. No, I don't have the manliness and the level of testosterone and the ability to close hard loans like Keith does.
Oh, all right.
It is just stress. It's a stress beard. Definitely.
You're really 25 years old, aren't you?
That's right.
He's been in the mortgage business for 6 hours.
Benjamin Buttons don't have shit on this.
You know, Keith also has very successful YouTubing children.
What?
Yeah, they have a video that I believe is 16 or 18 million views. Is that right?
No, it's more than that. I think it's like
more than
sorry, 28 or 30 million views. Yeah.
Wow.
They created their own video that has to do with the clown. What's the clown's name?
Yeah, Pennywise. They did a parody.
Oh, okay.
Yeah, they did a parody, and they were kids, right? They were.
Yeah, they were boys. Maybe like 10 and 12, I think.
Yeah, and they still get paid by YouTube every month, don't they?
Oh yeah, they still generate revenue from YouTube. Yeah, and a lot due in part to that. I think they have 80 or 90,000 subscribers.
Dang.
Yeah.
See, and
we brought the wrong steel to the show.
Yeah, but maybe so.
No, because Brian, you're going to learn a lot from Keith, because Keith is going to talk about some of those loan products that I just am so stubborn that I haven't learned about them.
Okay.
One of them that I think is very popular right now, because investors are starting to get back in this game a little more. There's a few more, foreclosure's up 1,000% from when you weren't allowed to go into foreclosure at all.
Okay.
Right. So there's 4 or 5 out there now. And some investors are starting to get back into business, and they use a loan that's called a
debt service coverage ratio loan.
Debt service coverage ratio loan.
DSCR.
I just realized I've been saying DCSR the whole time.
That's okay. You're kind of look like a cop, so that makes sense.
He definitely gives a cop vibe.
I give a cop vibe? I thought I gave mostly a running from the cop vibe.
At times. When your hair's longer, you do.
I did. I just got the Flowbee out, and it was a little unruly before the marathon, and I didn't want to have my hair and my eyebrows in my eyes. So I
have that.
I Flowbeed both.
All right.
And I got a little tighter, a little higher, a little tighter.
Yeah, what's up with the eyebrows anyway? I mean, we're, none of us are young men. It's, by any
Why do they
means,
grow
but
like this?
yeah, what happens? It's like all of a sudden, it's like you have squirrels on your face.
Oh, dude, I look like the other day. I swear, I look just like the Martin Scorsese.
Oh yeah, that guy's got some brows.
I mean, they were in my eyes. Like the eyebrows came down and were in my eyes, and I thought, I've been trying to grow a beard for 56 years, and I've grown eyebrow beards in like the last 2, and like they just grow. Yeah,
Yeah, no, I feel you 100%.
and in the ears,
Dude,
You get
I
the
was
ear hair?
never so offended whenever my barber Marcus
oh,
actually would is doing the touch up and the line up and all of that. And then he starts cutting shit out of my
Yeah.
ears.
Do you
And
want
I'm
me to-
like, what are you doing? And he's like, what do you think I'm doing?
Yeah.
And I was like,
He didn't even ask. Like my lady
No,
said, "Do you want
no.
me to mow your ears?"
yeah, he just got in there and started doing
welcome
it.
to Old Man Talk here on YouTube.
Well, I want to know how it happens. How come it stops growing where it's supposed to and starts growing where it's not? That's my question.
My theory is that it just kind of slides down.
Oh, okay. There's some logic. So gravity,
It's
really.
gravity.
Yeah.
So it happens to the boobs and it happens to the hair.
There you go.
My boobs are so
Ears?
tight.
Are they?
Yep.
I
I'd show them
think,
to you, but we have a PG rating.
or do we? So then I can't say anything about
don't.
old man and sweaty balls.
Oh,
You can't.
Lord.
That's the whole.
Let's go back to.
Once you get to this age, you actually know what the temperature of the toilet water is. Woo, that one's cold.
Let's go back to DSCR. Can you describe that, Keith?
Yeah, well, absolutely. Yeah. So, well, a couple of things. One, both Fannie Mae and Freddie Mac have this rule that once you hit 10 finance properties, you cannot get another Fannie Mae or Freddie Mac loan. You can't get another conventional loan. So the only loan that's available is a debt service coverage ratio loan. If you hit that point in your investment portfolio, the biggest difference between that and any other investment property purchase is that it's not income driven. In other words, we don't have income on the loan application. We just look at what that specific property would rent for in the market where the property is located. That's the ratio. So if you were buying an investment property and the fair market rents were $2,000, then we're going to come back and say, hey, your mortgage payment can't be more than $2,000. So it's a 1-to-1 ratio in the best case scenario. Now that doesn't mean that, you could go buy a $250,000 investment property and put 5% down because, your mortgage payment's $2,000. It still kind of mirrors those other investment property products where you need 20% down at a minimum. Pricing typically gets better the larger down payment that you have, et cetera, et cetera.
How much is the PMI on that?
There is no PMI
Okay,
on
just
that.
want to make sure.
So you mentioned that Fannie Mae and Freddie Mac won't allow people to have more than 10 investment properties.
Nope.
Nope.
10 mortgages.
10
Okay.
finance
Thank you. Okay,
properties.
thank
Yeah.
Does that mean DSCR is only used in a scenario where you have 10 already, or could you do it with a second mortgage?
Yeah, no, you
Or
could do
with a
it. You
second
can do a
property
debt
loan.
service coverage ratio loan right out of the gates. I'd mentioned experienced investors, when they hit that more than 10 finance properties, but young investors utilize that program as well. So, if you're a kid out of college, maybe you bought a primary residence and you're looking at investment properties and you just don't have the salary to swing the payment. Well, you could look at doing a debt service coverage ratio loan because it's not income driven.
What if I have an
Fascinating.
investment property I own free and clear and I want to use some of that money to buy another one?
Then you just do a cash out refinance.
Okay, so cash out refinances work for them as well.
Absolutely. Absolutely.
So
And it's been a
is-
busy week for like debt service coverage ratio loans.
Has it?
Yeah. I think for Brad and for you. But Brad doesn't do that.
Brad says call Keith.
I call Keith. I don't understand it. Here's the difference really for me is as a mortgage banker, we control all the process. But when we step into these debt service covered debt, when we do
Nailed
these
it.
loans, we have to broker them, right? It's a product that we have to utilize a wholesale mortgage company to do these loans through. And for me, I lose control and I'm a control freak. And I don't know how to handle not having control over the process.
Huh.
And Keith has done brokered loans for a lot longer than I have. on the hard to do stuff. Like Keith, I see a loan that's hard to do and I got to broker it. I just say, no, I can't do it. Where Keith goes, oh, yeah, I can do that deal. So he's learned to navigate that process. And if you don't know the process, you're going to screw it up and you're going to give horrible service to your customers. And if you're like Keith and you know that process, he knows how to manage expectations, deal with that side of the business, and make it a smooth, easy transaction for people who are doing it, where if I did it, everybody's going to be mad at me. So it's about knowing your lane. It's the whole reason Patrick Mahomes doesn't play cornerback.
Okay.
Well, based on the Chiefs' performance this year, I don't know if Patrick Mahomes is going to be playing at all anymore.
Well, he may have done better if they may have done better if he played every single role, but you know that's the example I'm using, right? Like a quarterback wouldn't play cornerback. It's out of there. Yeah. Although it is really close. Quarterback.
Right.
Quarterback,
at least in sound.
Quarterback. Which one did I say last?
Quarterback.
I don't know. I think I said quarterback 3 times.
Sure you did.
So Keith is the quarterback
QB
of that process, because I just don't know it. And I haven't played in that realm as long as he has. And he does a phenomenal job at it. So
way to go.
It's a question. So if you say quarterback 3 times in the bathroom with the lights out, then does Patrick Mahomes appear?
Nope, not at all. But Kelsey will be there to hold your stuff.
Oh,
and Taylor Swift will sing while you go.
This all sounds so much fun.
So in the, I'm going to call it the non-conforming world, because that's what you and I called it for the better half of our lives.
Yeah.
It was a non-conforming loan. Today we call it
it's a non-QM loan.
QM, which means conforming.
Yeah. So that's kind of a head scratcher there, that whole qualified mortgage versus non-qualified mortgage thing. Because honestly, if you have someone doing a debt service coverage ratio loan, or, there are other non-QM types of loans as well, like if somebody's self-employed, and I think that we can all relate to that, to some degree. So, you're writing off as much as you can, on your tax returns to minimize your exposure there. So on paper, you might not be making,
that's right,
what you're actually making.
Sure.
And there are non-QM loans that will allow bank statements, look at the average of your deposits from your business, or, a lot of folks in this gig economy in particular are 1099 employees. We can use 90% of your 1099 income, for non-QM loans as well. But the second you start going, oh, well, that's a non-qualified mortgage, and folks go, what's wrong with it? Yeah. What do you mean I'm not qualified? I've got a 780 credit score. I just 30% down.
I tell them it's non-conforming.
Non-conforming. Yeah, there you go. Because equally, if you go, well, it's subprime, they're like,
oh no, subprime ruined America.
Yeah. So now it's non-qualified mortgage, but that doesn't mean you're not.
Do you ever just say, we're going to do a Big Short mortgage?
No, that would be pretty funny. I think that I could do that.
But think about it. Okay, so we're going to tangent a little bit, because you probably liked The Big Short, the movie.
It was fine.
It was a great movie.
Yeah.
And
what I understood of it.
You didn't understand The Big Short?
Honestly, there were times I was like, well, I have no idea what's going on, but I'll just keep watching.
So The Big Short, I watched it. You watched it. We lived it. We know what it was really about.
100%.
But it was a lie. Do you agree?
Oh.
Well, can I preface it before you answer?
Yeah, go ahead.
Okay. So The Big Short made it sound like every loan that went bad was non-conforming, and it was all the subprime world.
Mm-hmm.
But you and I both wrote Fannie Mae, Freddie Mac loans with 70% back-end debt-to-income ratios, because Fannie Mae said yes.
Yes.
We both did, probably more than we wanted to. Nehemiah, down payment assistance, seller paying all the costs, buyer with no money down, was 60, 70, and 80% back-end debt-to-income ratios. And when we did a non-conforming, let's say an NIV fixed pay 60 at WAMU, our customer had 25% down. Right? And if you go look at how many of those really crazy subprime loans went into foreclosure, and you look at how many Nehemiah FHA loans went into foreclosure, it wasn't 1-to-1. I mean, we were writing 100 FHA loans to every one NIV, fixed pay 60, 20% down loan.
Uh-huh.
So 90% of those foreclosures were Fannie Mae, Freddie Mac, and FHA.
Yes. Yeah, that was a big
did
part
not show
of
up
it.
in the movie.
But the movie bundled it as subprime flushed America. I think what they missed in that movie was, I think they sold A paper that was Fannie Mae paper, and they changed B paper to A paper, and then it got worse, and they changed that C paper to A paper, and those are Fannie Mae products and FHA products. Because there wasn't that many. I mean, you did it when I did it. We weren't writing 10 non-conforming loans to every conventional and FHA.
No.
It was 10 FHA and conventionals to every one of those loans.
But equally, in that same breath, though, how much of that was our experience? Because I know people like, that aren't, well, that sounds, let me back that up a little bit. I know loan originators at the time who were looking at people and going, oh, yes, you're a great FHA candidate, or, oh, yeah, you're a great conventional loan candidate. However, they'd stick them in a subprime loan because they could just swing for the fences, and they could make 10 times the money on a subprime loan. And, pull strings like, yeah, but if you set it up this way, then you can go to closing and walk away with $5,000.
Oh, we did do a lot of 8120s.
Yeah, there you go.
8125s.
Yeah.
But I look at my experience and look at the CP Morgan neighborhoods where I wrote 100 FHA loans in one neighborhood and had 86 of those go into foreclosure.
Wow.
Oh yeah, they have no skin in the game. It's easy to walk away.
Yeah, I'm behind on my car. I put $2,000 on the car, and I'm behind on my mortgage. You can keep the house. I put $2,000 down on that car. I only paid for an appraisal. Actually,
I'm Brian, your Indianapolis realtor. If you are looking to buy or sell a house in the Indy area, I'm your guy. If you're coming from out of state, want to make a move to the Indy area, I'm your guy. Check out the show notes for a link. We can get in touch and get you started. Thanks for watching. Now back to the show.
Actually, we probably rolled the appraisal and had the seller pay for it back then.
Yeah. Woo. You know who really made out like a bandit back then, though, were those Nehemiahs and those nonprofit programs that were middle-money.
Nehemiah made a point on every deal.
Yeah, well, but all they did was just go, okay, well, here, let me hand this money over to you for closing and pay me.
For those who don't know, and Brian probably doesn't even know what the heck we're talking about.
I don't.
So Nehemiah was a down payment assistance program.
Is that an acronym for something, or is that a word?
No, Nehemiah, it's a word.
Okay.
It's a Christian word.
Got it.
It's actually a name from the Bible.
Yeah.
And it was a Christian organization.
It was a nonprofit organization.
I
don't really know
Christian
about.
Based.
I don't know their religious
or religious based. And Nehemiah was a down payment assistance program for an FHA loan. FHA says you could get your down payment from a nonprofit organization.
Oh, okay.
So you would write the purchase agreement saying the seller is going to participate in Nehemiah, and they're going to donate 4% of the purchase price to the Nehemiah down payment assistance program. And then Nehemiah would give 3.5% to the buyer for their down payment. Nehemiah would keep the 0.5% before they sent. The seller could pay all of the closing costs, and my buyer had absolutely no money in the game.
Wow.
And with a tax credit, you're going to closing and leaving with money.
Yeah, you would leave with your tax credit. Yeah. And I could go down to a 580 credit score.
Wow.
Which was only competing with non-conforming 100% 580 credit score deals. That had that's 2 years and then became a prepay.
I feel if I was a buyer at that point, that sounds like a great deal for me.
But until something went wrong.
Well,
Let's say you bought that CP Morgan house.
Yep.
We put you on what's called, and this is what's crazy right now. It was a buzzword as rates got into 7. Oh, you should do a buy down, a 2-1 buy down. Those are great. We did 3-2-1 buy downs on a Nehemiah program where the seller paid your closing costs, gave you your down payment, and you came in with the interest rate of 4%. Next year it went to 5%, and your taxes kicked in because we didn't have to calculate your new CP Morgan taxes. So that wasn't in the picture. So your payment went from, $900 a month to $1,300 a month to $1,600 a month. And I didn't put any money down, so you can have this stupid house.
Wow. Okay.
We lived that.
Yeah, we did. Definitely. It's interesting though. It's easy to focus on like that, Nehemiah, or there were other nonprofit
neighborhood
programs out there as
neighbor
well.
Next door.
Something
like that.
Good neighbor next door or something like that. Yeah. But there were other nonprofits out there that were participating there. But don't lose sight of even Fannie Mae and Freddie Mac had 100% financing options available.
They
as
did.
well.
Woo!
Yeah.
Yeah. You could pop into an 80-20.
Yep.
So we would do what, an 80% first mortgage,
Yep.
and we'd go to, not to get sued, but Bank One Financial. They would do the 20% loan off of the appraised value. So let's say you bought a $100,000 house, because that's what they cost back then, and you put down, you did an 80% first mortgage, and you had this 20% second to get you 100%. But the house you bought for 100 appraised for 120. So I could have you walk from the closing table with
the extra
$20,000.
Yeah, the extra 20 grand.
So let me ask you this, because you have people say to you, the housing market's going to crash. They've been saying it for 2 years now. It's going to crash because this is just like 2008. How much is it not like 2008?
Oh, it's nothing like 2008. Number one, all of those agencies have reeled in their guidelines, in particular Fannie Mae and Freddie Mac. As you had mentioned that, gosh, back there before the 08 meltdown, on a conventional loan, you were, as long as you got an approve eligible or an accept eligible, you could rack debt to income ratios up to like 60-70%. And that was pre-tax income.
It's crazy.
Yeah. And, now they've reined that, in, and those guidelines are really tight. And that's across the board, even with, non-QM or, non-prime, subprime, non-conforming, all of the above. Even their guidelines are, are a little more strict than what they were. So I don't see that happening.
Yep.
Now that doesn't mean that, that we might not see a spike in foreclosures, just depending on, how the job market goes. There's a lot of pressure, on the job market right now. So that doesn't mean we won't see that, but I don't think it'll be another event like 08.
We're still like 3% under normal for foreclosures. And when you think 3% of the homes out there, that's a large number of foreclosures we're behind. And then I read a statistic that over 40% of Americans own their home outright.
Yeah, that just came out this week or last week.
40%.
Yeah, well, given the nearly free money that we're doling out, a handful of years ago, it'd be easy to do.
Well, you're probably close. You're probably close to free and clear.
Yeah.
And Brian,
Red door
here. So when you pay your house off, you have to paint your door red, your front door.
Though neither of us have done that. But
We don't live in Europe.
You had mentioned earlier about my boys, Caleb and Aiden.
Yeah.
I'll never forget when they came to me going, "Hey, Dad, can we let YouTube start advertising on our videos?" And my first thing was like a total dad response. Well, son,
What does that mean?
Before they'll allow you to do that, you have to have thousands of subscribers and thousands and thousands and thousands of views. And they're just looking at me like,
Yeah, whatever, Dad.
duh. And I was like, wait, you guys already know that, don't you? And they're like, well, yeah, we tried to do it on our own, but we weren't 18, so they wouldn't let us. And I was like, okay, well, that's fair. And, and I would monitor content because they were kids. They were like, 10 and 12 or thereabouts at the time. So I'd monitor content, but never really pay a lot of attention to,
what
was going on, the mechanics of it. And I actually logged in there and I was like, holy smokes,
you got more views than Channel 13.
Yeah, I mean, it was, it was really something. And there again, just in my mind, because, that wasn't making money off of YouTube wasn't, just in my, it just wasn't in my wheelhouse.
Yeah.
So I was thinking, oh, well, maybe they'll make a couple of $100, it'll be good for them, make a little bit of money. And then like that one video that you were talking about, the It parody with Pennywise the Clown, they made like 50 grand.
Jeez.
As kids. Yeah. Like 100%. Yeah.
Oh, and then I can hear Keith. I read the YouTube contract and you're not allowed to put this in your own checking account.
Oh, Dad.
This is used to pay off the mortgage.
Yeah, but I was just like head blown, like whenever like that revenue actually started coming in, and then you're like, wow. But it's enabled them to hey, I want the new Xbox Commander, 2000.
Get it.
Yeah,
it's your money.
Yeah, it's your money.
Make another video, chump.
Yeah, there you go. Yeah.
So, we talked about the viral video that they had. They still pump out videos on a regular basis, I assume.
Yeah, I know.
Slowed since college, though, haven't they?
Yeah, they've and they kind of each do their their own thing. I know that like Caleb has been he wants to remain anonymous there. So he's been working on a side project, and then Aiden has been doing a lot of animation.
Oh.
And I know that even over the holiday, he was working on like a Stranger Things, finale spoof animation thing. And he's in film school, as
Nice,
well.
okay.
So
Okay, so since you watched your children do this and you've seen the success that can come from it, was there ever a part of you that went, I need to get on this game?
Oh, 100%. I told my wife, like, flat out, if I didn't have a professional reputation to uphold, I could be like a YouTube millionaire.
So is that why you haven't done
I feel
it?
like you should.
Because I really
You've got a
believe-
face for YouTube millionaire,
I
baby.
totally think so. And I think you can have an alter ego. You can be Brad the mortgage guy and Brad tasting tequila with Brad guy, right? And as long as you uphold the work standard that you have, which the bigger the tequila thing gets, the harder it is. I just actually turned down an additional trip to Mexico because I'm like, okay, I got to stay home to do loans. So I'll be down there 3 times in January and then 1 time going into February, or 2 times in January and 1 time coming in February. And I got offered another trip, and there's a point where I go, okay, I have to work.
Are you forgetting about your boys over here? We might not have to work that weekend.
I don't know how I'd get to be invited, is what I'm saying.
I've been trying to take him to Mexico. I've said I'd pay for it, and he's scared of the tequila.
I'm an experienced guy. I'm in. I'm just not paying to go. Just saying.
All right, well, I'll cover the next one. You come with us.
Okay.
But it is interesting how this can work. And I truly believe that if you find something you're really passionate about and you can just take the time to make videos about it and talk about it, and if you're passionate about a thing, that thing's going to be mailed to you if you talk about it enough. Because people will have a passion about it, but they're not maybe motivated to go on camera and talk about it. So they don't have that ability to communicate that. So they're going to watch you because they want to dive into that passion too in another way.
Honestly, though, it's easy for me to joke about that, but it's something there that really hadn't interested me a whole lot. Even with their success, it's just something that it kind of seemed like a young person's game to me.
Yeah.
However, as we grow, and we have to continue to grow, or we're going to be out of a job.
Right.
I mean, at the end of the day, but as we grow, and as I look at, okay, what's that next step? How do I, elevate myself and continue to grow into that next chapter? It seems that it's so content driven.
Yeah,
that it's almost like, oh, I better get my shit together and kind of start figuring something out there, because it seems proven time and again, that regardless of what your content is, if it's accurate, inaccurate, well presented, as long as people like it and find it entertaining, they're going to believe it.
Yep.
And man, I think that's kind of in the cards for me anyway, to kind of look at where that next step might be.
I'll say, I've only known you for a few years, 6 or 7 years now.
Is that how long you've been back?
Yeah,
Okay.
6 or 7 years, and maybe no, actually 9, almost 10.
Yeah, I was gonna say it's been longer than that. I was like,
10.
which office were we at?
Almost 10 years.
Whenever you came
Wow,
back, yeah.
Time goes so fast, and my memory's getting
I'm
shorter.
a thief.
You're one of the most. This is going to be a Keith appreciation minute.
Oh,
You're one of the most interesting, eclectic, smart people that I've met,
Well, thanks.
and have a knowledge base of so many different things, but also have a great way of sharing and telling stories of those things. And your sarcastic, underlined humor, I absolutely love. For a long time, we only texted different ways to flip each other off. And we found some good ones.
Oh, absolutely.
Yeah, there's some good ones.
Absolutely.
I think that if you just did a talk show format show on YouTube and talked about whatever the hell you wanted to talk about, I would watch. You're better than Jimmy Kimmel and Jimmy Fallon combined. And I would watch your show. I think it'd be awesome.
there you
Well,
go.
thanks.
The Keith Podcast coming at you 2026.
Keith Steele, stealing your time.
Hey, I'll just sit back and let you guys do it.
Word.
Yeah, I'll just sit back and look pretty and let you
We
guys
just
take care of
became the
everything, right?
producers of this show.
I think we will produce this show. Yeah, that'd be a great show.
One of us gonna have to give up our full-time gig.
Well, I think Keith will make $1 million doing it, and I could charge him $250,000.
Hey, that sounds like a deal to me.
That'd be fantastic.
Yeah. I
Keith,
can get behind it.
any other mortgage nuggets you want to drop before we go?
317-418-0548. Call or text. I'm here and available in offering like same hour pre-approvals. Get with me.
I do want to add, so we did hit the investor kind of loan.
Yeah.
Do you help the regular residential person?
Nope, those all go to me.
Into that? No, it's got to go to Brad. Okay, just checking.
No. That's I'm doing all of the loans.
Yeah.
Fannie Mae, Freddie Mac, FHA, VA, USDA, all of the non-QM stuff, or non-prime or non-conforming stuff. And then we also have access. You probably know this, but don't care. But we also have access to some hybrid commercial stuff.
Cool.
As well. If
He even
you're
finds
interested.
some every once in a while a down payment assistance deal.
Yeah, there are still down payment assist. That's a good point.
Yeah.
As you're kind of Rolodexing through things here. There are still down payment assistance programs that are available. And it's
They're
with
just not very
those,
they're not family friendly, in my opinion.
they're not cost friendly, in my opinion.
Yeah.
Is where we look at it there, and we all know this because we're working in this business, but those modern day down payment assistance programs, in most cases, and this is across the board, by the way, in most cases, you're paying 3 or 4 points in addition to all of the other costs
With a higher rate.
Yeah. So the only way those work is if you have a seller, because they're FHA loans, you have to have a seller that's going to contribute 6% of the purchase price, to pay, not only normal costs, but then those extraneous costs as well associated with those down payment assistance loans.
Then hard to get out of, hard to refinance,
Yeah.
hard to sell.
The
Not all of them, but
refinancing
most
part
of them.
isn't really, FHA will allow 100% CLTV, so you could still do
But the recapture expense is what I'm more talking about.
Oh, absolutely. Yeah. On that end can definitely be salted.
And yeah, I'd say they sound great. And, I've even kind of preached how, I've had clients get money back at closing, but, then realizing that you're stuck in this for 8 or 9
Yeah,
years.
you
And if
can't
you
be
try
a
to get
repeat
out
customer.
early, you're kind of screwed there, unfortunately.
Mm-hmm.
But you know what? It works for some people. And
To throw a little bit more towards Keith, he does a great job as a standard conventional loan officer.
stand-up comedian.
He works the same kind of hours I do, all of them. We both, we've
Which
kind of
is
joked
all the time.
We don't work bankers hours. We work all the hours.
That's right.
I was in Florida.
Even weekends?
Even weekends.
Even on vacation?
Even at 6:30 in the morning, where was I?
Sorry, sitting in the kitchen,
On
working
the desk,
loans.
getting my loans done. So it's about the customer first. And Keith's always been that same kind of guy. That's why I like him so much. We have this same mentality, and Keith helps me out when I'm gone. I help him out when he's gone. So if you're looking to buy a house, sell a house, refinance a house, get a DSCR loan, DC at the Keith's your guy.
Nest Mortgage. What a team.
We make it happen.
All right. Well, on that note, we want to thank everybody for tuning in today.
Cheers.
Keith, want to thank you for being here and sharing your nuggets of info. And we look forward to seeing the Keith podcast on YouTube coming soon.
Gosh, I do.
Till next time on Indiana Success Happy Hour. Cheers.
Have a great one.
Cheers.
Closing deals and cracking jokes, lender stall and buyer's ghost. We vent, we sip, we laugh, we think. Real estate